Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. But first, I would like to tease you with which company which we are getting today in KYC. There are certain hints which I'd like to give you, and an important hint is that CEO has resigned. Existing leadership, will they take over going ahead? Is there an interim CEO involved? We'll be asking this question to the management who will be joining us, and he's Abhishek Parekh, the group CFO coming in from the group. Also, the second hint I am giving you is that the company is starting a new solar inverter manufacturing lining as well. We'll be asking this management what's the growth potential about it. It's one of the largest players in the renewable energy space, which we'll be talking about. And also the stock has taken a beating and it's down 21% from 2025 highs. So let's reveal the company, which company it is all about. But one more hint I would like to give you, that company's color is similar to the color I'm wearing from my jacket, and the color is green. And the company's name is Waaree Energies. Let's pull that out and see. This is the company which we'll be talking about today. A lot of news flows are coming in, and one by one we'll be getting most of these details from Mr. Parekh. Also, first of all, let's see what's about the company. But before that, let's see why we have actually got this company. This is the existing management that's they're expected to take over post CEO's resignation. That's one of the most important questions we'll be asking. The second question would be, will this be a start of new solar inverter manufacturing unit? That is something company has announced, and we will get you all the details. But a very major overhang remains is US-India trade deal. They are hitting the exports, and some probes are also going on. So we'll understand where's the progress there for the company. 2026 outlook and the budget expectations for the solar industries as well. That's something which we'll be also watching out for. Looking at the expansion on the new areas, BESS and electrolyzer manufacturing. BESS is nothing but the battery energy storage system. That's what we'll be asking Waaree Energies today. And also the geographical mix, how the position is mixing. Around 20% comes from your exports. Will this change? Will this come down? Will this go up? Any new products will be coming in? Because the company and the industry are going into major products and a lot of new areas. Is there a commoditization at play? How different is the company? Is there any moat? That's something we'll be asking for. And on the show, we'll have the company's management, Abhishek Parekh. He's the group head finance, and we will be asking him all these important questions. But do stay tuned. That will be coming in some time. Also, let's talk about, about the company, what it's all about. Of course, we have talked about it a lot, but there are some incremental developments, and I would like to point that out as well. Largely to put in perspective the company itself, let's have a look where the company is actually standing. And the latest information is that Amit Pathankar, he has resigned as the CEO. That is something, there's a concern, but he will be pursuing an entrepreneurial journey outside. That means net, there's an inside person who's already in the company. He will be joining in, his Mr. Rathod, Jignesh Rathod, he will become the CEO. He already is with the group for the last 18 odd years, and he's currently the existing director of operations and is associated with the company for a really long time. Also, the operational commencement, that's a new announcement coming in for the new solar inverter line manufacturing facility, and this growth will be coming up in Gujarat. There'll be two of these products which will be coming in, and these are the latest news coming in from the company itself. One is slightly negative, another is positive, and this is the details coming in for the news which has come in recently. But about the company, this is also very much important, and I'd like to talk about it. The first one, of course, being that their entire capacity is actually expected to grow up, and we will be giving you more details about this. If you could just show about the company, what are the key details about it, and that will give us an entire future. It manufactures solar PV modules, and apart from this, Kalpraj Damshi Dharmshai, he owns roughly 2.22% stake in the company, and that's what we'll be looking out for. The company makes multiple connected solar cells, and that itself we have spoken about it a lot. It converts sunlight into electricity using photovoltaic effect. The PV which we are talking about, that's the full form. Modules, what it is all about, 18.7 gigawatt cell. That's the second business. That's 5.4 gigawatt over here. And let's move and see the order book. That stands at 47,000 crore rupees. That's a big amount, almost touching that 50,000 crore mark. And we'll be asking Abhishek Parekh about this order book status as well. But let's see the breakup, how things are happening, the domestic and the international order book, how the revenue mix is looking like. And largely, it seems even Stevens, but we'll go into more details, especially on the US front. We'll ask Mr. Parekh. The company has approved a multi-year capex push, and the number is on the screen. Look at that, 8,175 crore capex expansion coming in, and this is across the segments. And this company wants to become a full stack energy player and not just a solar module maker. Most of its peers are also stating about it. But what's actually moat of Waaree Energies? We'll find it out in the show. The capacity has jumped from 3.5 gigawatts to 20 gigawatts. And that has done really well for the company. And the company has made for BESS the largest capex of 8,000 odd crore rupees. This is a grid scale storage, and BESS, that's the important abbreviation I would like to point about. This is your battery energy storage services. That's something which everybody will be watching out for. Capacity of 300 megawatts to 1 gigawatt is coming in for green hydrogen, and they are positioning the company for future hydrogen opportunities as well. That capacity for inverters, that has also gone up by 25%, which is there on the screen. And also, apart from this, the inverters, they are strengthening the balance of system capabilities. So these are the important key details, I would like to talk about, but there are a lot of sectoral headwinds, and that's where my concern starts coming in for these companies. There's a massive domestic overcapacity. Pricing pressure is happening, and too many players are adding their capacity, and every player says they are unique. But is it? Also, let's look at the question of export roadblocks and global trade wars. That has significantly impacted the export potential of these companies in the industry as a whole. And that is where my concern starts coming in, especially regarding the outlook. But let's see how the rating parameters actually pan out. There are important 8 parameters where we judge the company. I would like to start with them. Of course, it includes your income statement, cash flow, balance sheet, return ratios, and also shareholding, street cred, which is nothing but the stock movement which has happened for different investors, and also the valuations with its peers and the outlook going ahead. So these are the 8 parameters where we'll judge this company in KYC. Okay, let's move on to the first parameter, and that is the income statement. Largely, we see how the movement has happened. 3-year CAGR, look at these numbers. The left side is very important. You should be looking at it. Revenue, EBITDA, PAT, all these numbers are showing really good strength, and there's literally nothing to take out where there might be some concern for profits, research, intelligence, and that is why for income statement, and even let's pull out the numbers which have come in the Q2, the H1 numbers, that has also been very strong performance. Generally, when you look at these companies, you should look at a year-on-year basis. So this is the numbers which you should be actually targeting, and this has been really strong, and that is why I will be giving this a strong thumbs up when it comes to the income statement. So after the income statement, if you look at it, the margin trajectory, that has also gone up very much. And can this maintain it? That's the question going ahead. But net, it's a very strong show coming in. Let's show the balance sheet now. That's the second parameter I'm talking about. And largely, the numbers are decent. The debt equity ratio of these companies still at the ratios which are decent compared to what the capex announcements and the expansion is happening. That means the capital allocation policy is good. And looking at the numbers, especially in the cash balance area, this is important to track. It's more than 7,800 odd crore rupees. That means liquidity is there, and more or less the balance sheet, which seemed very nicely, it has been worked, and that is kudos to the group CFO, Mr. Parekh, as well. But for this segment, I will be giving this a strong thumbs up as well. So income statement we have done, balance sheet we have done, but let's look at cash flows. Whenever this heavy capex industries comes, there's a concern comes on the cash flows also. Can the company manage its cash flows? And let's look at the numbers, how it's actually panning out. Largely, the numbers are very decent. The PAT numbers also, you see, that has, kind of gone up. The cash flow conversion to PAT, that's a very important ratio to look at, especially in this industry. And look at that. That has also remained very decent. The only concern for me is that the net cash flows, because of the inherent nature of the industry, they are not supposed to be always, having a trend. And because of that concern, this is industry-specific news. Still, I would just give this a neutral rating when it comes to the overall cash flows. After cash flows comes return ratios. They are very much important. And in these businesses, the return ratios, if they are upwards of 20%, It shows a lot of attractiveness for the investors. And look at it, this has been growing. In FY21 it was 16%, and 22, and 32. There was some moderation in FY24, then it's back. And it's higher than the 32 number which we saw in FY23. And because of that, I would be giving strong thumbs up for the ROC numbers. So we spoke about 4 parameters. Now let's move on to the other parameters, how the shareholding pattern has changed. And remember, it is still a recent listing if you're a long-term investor, but how things have panned out. The promoters have held up the stake of 64%, but my interest rise in the institutions, FIs and DIs. FIs, look at it, from 1% it has gone up to 6%. That indicates a very important positive trigger. Same thing goes for your DIs, from 2% it has gone to 3%. And largely the retail amongst the public in the social media where we have talked about these stocks have actually become less discussion, and of course there was a correction in the industry and some pressure as well, and because of that at least the retail is not liking the stock, but institutions are lapping up, and because of that, both of these reasons, I will be giving this a neutral rating. Also, let's see, apart from shareholding pattern, street cred, what has happened. And there's one reason why retail is not liking this counter as of now is because the performance has not come. In 1 month, it's down 7%. Even if you see overall other parameters also, it is down. The 6-month also stock is down 7%. From the highs of 2025, it's down 21%. Year to date, nothing much to the investors. And even the 1-year basis, almost the year is end, the numbers would be coming in on the higher side. But net, nothing coming in for the medium-term investors. So I would be giving this a thumbs down going ahead for the street cred. But valuations are also very much important, and when we judge the company, I have taken the peak valuations of it when the entire discussion amongst the retail and social media was high. This was the peak numbers. After that, some corrections have happened, but before that, I would like to give the 2 important peers who have come in, Premier Energies and Vikram Solar. They have also come in, and largely this is a newly listed company, Vikram Solar, but there has been a correction around 20-25% of discount coming in from the peak valuations. And it's coming in at roughly 41 times, 43 times for the 2 closest peers which I'm talking about. And net, I would still give a neutral rating for these companies going ahead. And right now also I could say that these companies might not carry that much valuation premium as they were carrying ahead, because the outlook for the industry, there are significant, you could say, headwinds coming in. But we spoke about 7 parameters. The 8th parameter is also very much important. And that is the outlook. That is where the biggest concern comes. That is where we ask the biggest questions to Abhishek Parekh, who's the group head of finance at Waaree Energies. The outlook, they are reaffirming this guidance for FY26. So that's the question we'll ask. Will they downgrade it? Because there's so much of, you could say, headwinds happening. The execution of the ingot wafer cells, module units, are they on track? We'll be looking at the timelines. The cell production is continuing its ramp up. That's what the company had mentioned in Q2, and they're expecting this to better in FY26's second half. So this is very much important as we track the overall timing of the company. Also, apart from this, the inverter, BSS, green hydrogen facilities, when will they ramp up? And the company is over diversifying. Is it that, or is it the entire industry doing it to prevent the commoditization of the solar business? The operationalization remains a very key component where we'll be talking about the overall expansion policies. These are the important outlooks, but I would like to give you all the ratings in a KYC show for the Waaree Energies. A very strong start, to be honest. When you look at the financials, they have green ticked most of the boxes: income statement, balance sheet, cash flow, and return ratios. We see out of this 4, they have got 3 thumbs up. But on the other hand, the concern starts coming in. That's the second half of KYC. Shareholding, evaluation are neutral. Street cred, nothing much has come to the returns for the shareholders, and that's where the concern comes, and outlook is definitely there. There are some overhangs, be it the probe in US, be it the transition in the management, which the company will talk about. So net, despite having very strong fundamentals, there are some questions on the outlook. So because of that, I have given a KYC rating for Waaree Energies at 5 out of 8. It's on the higher band because of company's strong growth in the financials. And speaking of financials, we are having companies, group head finance, of Waaree Group, Abhishek Parekh. He's having roughly 8 years experience with Waaree Group. He's a CA, CS and an alumni from IIM Kozhikode, and interestingly a doctorate in corporate finance as well. A man of many hats. One more question for you. Hi Abhishek, season's greetings to you. The first question is, of course, we would be asking is, Abhishek, we would be asking this question. The first question being is some kind of news flow has happened on management transition. We don't want to know about the new person coming in, but we want to know about one important thing is this an interim post or is this going to be a long-term appointment?
First of all, thank you so much for having me on the show. Good morning.
Good morning.
On the question of change in management, like yesterday we have announced change in management, wherein the existing incumbent, Mr. Jignesh Rathod, who has been with the group for more than 17 years now and was heading the operation all across the manufacturing units, has been elevated as the CEO. And Mr. Amit Patenkar going out to start his own venture. So we have someone who has been with Group for almost 2 decades now and have a decent enough grip on the operation in India as well as in the US.
Parekh ji, one more question that there's a US probe was there, and in September, company stated that they are talking with the authorities. Since US comes with almost 18 to 20% of your revenues, it's very important to ask, and that's what investors have written to us in our KYC show as well. So what's the update on the US probe? Is it over? Is it still continuing? What's the view?
So basically, such kind of investigation, or I would say assessment, takes some more of time, between 6 months to 12 months of time. Right now, we are in the stage wherein the documentation is ongoing. We are in continuous touch with authorities, and we are cooperating very well with them. And we expect the next 6 months to 12 months of time wherein this should come to a conclusion.
All right, but Abhishek, a lot of over capacities are there in the industry. Sometimes pricing pressure also comes in, and there is a major chunk of revenue for you in this segment. So there are a lot of industry concerns. Would you like to share these concerns, and what is Waaree Energies doing which is different, or what's the moat right now? When there is adversities, how does Waaree Energy stand out?
Sure. If you look at last, let's say, current financial year, last 3 to 4 quarters of time, you will see that company has been continuously getting new orders from the US market. We have been, I would say, steadfast enough to start our operations well in advance and have operating capacity of 1.6 gigawatt last financial year. This financial year, we have added 1 more gigawatt to the capacities in US, and now our total capacity in US stands at 2.6 gigawatt. Apart from export from India, now we have a very firm and very large background on the US soil itself, wherein we are manufacturing 2.6 gigawatt worth of modules every year. Also, there's an ongoing capex of 1.6 gigawatt in the existing US facility. So our total capacity in US over next few months should reach 4.2 gigawatt. Our order book from US is strengthening quarter by quarter, pillar by pillar, and we expect this momentum to continue, considering the US demand of power. If you look at the increasingly power demand all across the world, especially in US, driven by the AI data center, all of these new power guzzling units are taking up. So momentum is very strong, and we are really standing very positive over it.
And Abhishek, this is an industry-specific question. Your peers are also going into various new businesses, also invert wafers, and there's a lot of expansion happening. Trying to backward integrate the entire ecosystem. Great skill is something which you had spoken about earlier as well. I would just like to know that if everybody is doing the same thing, what is that unique thing or the moat for Waaree Energies here? How you're doing it differently from your peers?
So first of all, I would like to start from last 2-3 years. If you see our capacities, we have increased our capacity from around 2 gigawatt in 2021 to, as we speak, more than 20 gigawatts in India, and with US capacities, our capacities are beyond 22 gigawatt. So almost 11x expansions we have done in module capacity over last 3-4 years of time. In cell capacity, today we are the largest manufacturer of solar cell as well in India. with 5.4 gigawatt cell capacity operating in Gujarat. Another 10 gigawatt is under construction at very advanced stage. We expect this 10 gigawatt capacity also to go live by next financial year. So by next financial year, our total cell capacity will be around 15.4 gigawatt, again, the largest in the country. So on module front, we are the largest in India, not just in India. Overall, if you see worldwide, it would be the largest non-Chinese capacities worldwide. Cell manufacturing side also, it would be largest capacity in India. Also, when we talk about backward integration, I would rather say it more than diversification, it is need of the hour. Because as you go deeper into the business, demand dynamics remains very positive all across. But at the same moment, you also need to be very aware that in order to expand your margins, the continuous backward, forward, as well as horizontal integration is required. And we are trying to build this organization to a point wherein we should be integrated enough so
Sure,
that we can
sure, Abhishek.
pass through
Correct.
any market scenario. So
Perfect.
that's why the backward integration is being
Right.
focused a lot, and we are doing it
Right,
attentively.
right. That's the view coming in from Mr. Parekh. But Abhishek, one more query is there, and that query is the guidance, the FY26 guidance. In Q2, you had reaffirmed that this will be the EBITDA guidance. Are you going to change with so much incremental activities which have taken place, or any downgrade we can expect, or you are satisfied with the numbers which you have given for the FY26 ending?
So at the start of the year, when we have said that we are expecting EBITDA margins, EBITDA numbers to be between 5,500 crore to 6,000 crore of EBITDA number for this financial year, we have stand very firm on the EBITDA guidance. We continue to hold the same number. We would also really want to keep giving positive surprises to our stakeholders, shareholders. So we would really want to hold up to our EBITDA guidance of 5,500 to 6,000 odd crore at this point in time.
Positive surprise coming for the stakeholders. That, of course, at times company will over deliver from their guidances, but all the stakeholders are listening to you right now. Any other positive surprises we can expect, say, in the next 3 months?
So when I say that we have very positive thing for our stakeholders lined up, I meant to say that we are going with more capacity expansions. We already have 27 gigawatt worth of module capacity expected over next few months of time. So from 22 gigawatt of capacity right now, we should be around 27 gigawatt worth of capacity over next few months. Similarly, cell capacity, new capacity is also coming up. So when you're building these new capacities, the revenue number, the production numbers are bound to go high. Resultantly, results are expected to be better because of the new capacity that keep on coming every passing quarter.
All right.
We have seen in last few
Yes.
quarters the same phenomena as well.
Yes, Abhishek, that's a very important way to defend your position in this. But Abhishek, budget is also coming near. It's just 1 month away almost. What would be your expectations for the industry? Any kind of more duties you're expecting from China, or something more in PLI? What is you or your entire company or the industry expecting?
So first of all, we would really like to thank the government, which has taken reasonable steps over past, be it PLI, be it ALMM listing of panel manufacturers, now the ALMM listing for solar cell and ingot and wafer manufacturers as well. So there are a couple of areas where government is already working upon that we understand through our communication across various channels. We remain positive on government's positive policy affirmation every passing quarter. Like recently, government has announced the GST cut. Even on the solar panels also, the GST rate has cut down from 12% to 5%, which has been very positive for the end users, including the households whose cost of solarization has now cut down by 4 to 5% after the recent GST cut. We are also expecting similar movement from the and positive momentum from the government side going ahead as well. No specific comment on what we really want things to go across,
right.
because it will be difficult for us to comment.
Abhishek, there are two important areas which everybody is talking. First is BESS, battery energy storage systems, and second is, of course, the electrolyzer manufacturing. A lot of unlisted companies are coming up. A lot of new players are also coming up. Whether they are true or not, that's a big question which I am asked in the private equity space. But for you, what's the status update looking like for these new segments? Are there facilities getting ramped up? If yes, by when we can see that in the financials?
Sure. So as I said, we are going backward integration through ingot wafer cell. We are also going horizontal integrated through manufacturing BESS as well as electrolyzers and now inverters as we speak. So battery energy storage systems, we have earlier announced that we will go ahead with 3.5 gigawatt worth of capacity of battery cell as well as total panel. But now we have enhanced our capacity from 3.5 gigawatt earlier announced to 20 gigawatt today, which includes 20 gigawatt worth of BESS cell as well as pack manufacturing. We are expecting the first phase, which is 3.5 gigawatt, to commence from next financial year, FY27. Second phase of 16.5 gigawatt is expected in FY28. So that's our guidance already given to markets. We hold the timeline guidance as well. Also on electrolyzer manufacturing, we have guided that over next few months, we are expecting the electrolyzer factory also to go up. There also, we have expanded our earlier plans. Initially, we were going ahead with 300 megawatt worth of electrolyzer capacity. Now we are expanding it to 1 gigawatt, almost 3x of what it was earlier. We are very much on time on delivering these capex every time at the time that we have committed.
Right. Thank you very much, Abhishek, for your time and how the industry and the company is placed going ahead, and season's greetings to you and Waaree Energies as well. So that's the management, Abhishek,
Thank you so
speaking
much.
about the important growth, and a lot of questions which we had asked, a lot of concerns were there, and the management has defended their position. So we will get you more details on this as well. But for today, for KYC, that's all for the show. Thank you very much, folks.